Okay, let's dive right in. We're talking about lithium, an element that's being called the new white gold. But really, this is so much more than just a valuable commodity. It's the heart of a massive, high-stakes global rivalry that is absolutely going to define our century. I mean, it all boils down to this one question. Because whether you're talking about the car you're going to drive, the power grid that keeps your lights on, or even the future of national security, the answer is lithium. It's become completely, utterly indispensable.
And you can see just how deep this goes. I mean, we all see the explosion of EVs on the road. That's obvious, but it's also the enormous batteries we need to back up our power grids. And it goes even further, powering the gigantic data centers that run our AI and forming the backbone of advanced military tech. It is, no exaggeration, a pillar of the entire modern economy. Now, what's so fascinating is just how wild the market has been. Look at this roller coaster. It hit a crazy peak back in late 2022, then the bottom just fell out. But look ahead to 2025. It's already projected to make a major comeback. This isn't your standard supply and demand. This is what it looks like when a resource becomes a strategic asset with huge geopolitical forces pulling the string.
So, let's get to our first major player in this whole game. You really have to start with China, because for years, they have been methodically building an incredible chokehold on the entire global lithium supply chain.
And this is where their real power is. This chart says it all. It's not just about who's digging the stuff out of the ground. China controls 65% of the world's lithium refining and a staggering 75% of battery cell production. This is the crucial middle part of the process, and by owning it, they make pretty much any country that wants to build an EV or a smartphone dependent on them.
And now, China is tightening its grip even further. They're not just controlling the materials anymore, they're actually putting export controls on the technology itself, the know-how you need to refine lithium. This is a brilliant strategic move to stop competitors before they can even start, making it incredibly hard for anyone else to build their own supply chain from scratch.
And this chart really shows the endgame. It's what people are calling the encirclement strategy. The forecast shows that by 2027, Chinese companies are on track to control half, 50%, of the entire lithium market. That's a mix of their own mines at home and aggressive investments in projects all over the world. It's a clear-cut path to total market dominance. So if you're the West and you see that happening, what do? Well, the response, especially from the United States, is shifting fast. They're moving away from just offering financial incentives to something much, much more direct.
And the key concept to understand here is this idea of the sovereign investor. This is a huge shift. We're talking about the government itself acting like a venture capitalist, buying actual ownership stakes in mines and critical projects to guarantee that the nation has access to these resources. And this isn't just a theory, it's already happening. The U.S. government took a 5% stake in the Thacker Pass mine, which is America's biggest lithium deposit. Billions are being pumped into the national defense stockpile. And maybe the biggest news of all, you have American energy giants like ExxonMobil getting into the lithium game, bringing just unbelievable amounts of capital and expertise with them.
Now, this whole chess match isn't happening in a vacuum. It's playing out on the ground in the two regions that hold the keys to the kingdom when it comes to lithium reserves, South America and Africa.
In South America, you've got what's called the Lithium Triangle, and you see two totally opposite playbooks. On one side, you have Argentina, which has basically rolled out the red carpet, saying we're open for business to foreign investors. Then you have Bolivia, which took a hard nationalist turn, where the state controls everything, and they've barely gotten off the ground. This split is exactly why a so-called OPEC for lithium has never actually happened.
And this table just makes the results of those different strategies crystal clear. Argentina's open model is set to cause a massive 75% surge in its production. It's attracting all the big players. Chile's taking more of a middle road with public-private partnerships, while Bolivia is just stuck. The strategy you choose really matters. Okay, now let's pivot to Africa, which is the biggest source of new lithium supply coming online. But here is the catch, and it is a huge one. A whopping 79% of that new African output is funded and controlled by Chinese firms. They got there first, and that head start has massive geopolitical implications.
But African nations are starting to push back. They're using policies called resource beneficiation, which is really just a way of saying they want to add value at home. Countries like Zimbabwe are literally banning the export of raw lithium ore. They're forcing companies to build the valuable refineries locally, making sure more of the profits actually stay in Africa.
All right, so beyond the big chess match between countries, there are a few wild cards that could just flip the whole board over. We're talking about new technology, social resistance, and even brand new places to find lithium.
The biggest technological game changer on the horizon is called direct lithium extraction, or DLE. So instead of these giant, slow-moving evaporation ponds, DLE is more like a high-tech water filter. It pulls lithium directly out of salty water in a matter of days, not years, and it has a much smaller environmental footprint. This could unlock huge new resources.
But for every shiny technological solution, there is a harsh reality on the ground. This is a protest slogan from indigenous communities in Argentina, and it just powerfully captures the growing resistance from people who see lithium mining as a direct threat to the one thing they can't live without.
And here's why they're protesting. The numbers are just mind-blowing. Traditional lithium mining in these dry salt flats uses over 2 million liters of water to produce a single ton of lithium. In places where water is already incredibly scarce, this creates a head-on collision between the world's green energy goals and the survival of local communities.
So as mining on land gets more complicated, a new and really controversial frontier is opening up, the deep seabed. Now, there's an international body that's supposed to govern this, and China holds most of the exploration contracts. But here's the twist. The US never signed the treaty, and they're signaling they might just go it alone, which could create a total free-for-all on the ocean floor.
So let's bring all these threads together. You've got the geopolitics, the tech, the protests. What does it all mean for the near future? Well, every single sign is pointing toward a massive supply crunch as we race towards 2030.
This one number pretty much tells the whole story. 3 terawatt-hours. That's the predicted demand just for electric vehicle batteries by 2030. That is a 3-fold increase in just a handful of years. The scale of that demand is almost impossible to wrap your head around.
And this creates the central paradox of the lithium market right now. We're in this weird, temporary surplus that's kept prices low, but just over the horizon, analysts are all warning of a massive structural deficit. Put simply, unless we start building new mines and refineries way, way faster, we are not going to have enough lithium to build our green future. Which leaves us with this final and maybe most important question. This whole global race for lithium is sold to us as the foundation for a cleaner, greener world. But as we've just seen, that race involves intense geopolitical conflict, serious environmental damage, and real social upheaval. So the question we have to ask ourselves is, what is the true cost of this energy transition, and who exactly is being asked to pay that price?